Weekend greetings, fellow traders. This is Austin. It's Saturday, March 4th, and on a rare weekend day here in 2017, I'm sitting down to do a little bit of market stuff. Going to have a video conversation with you. One of the several changes that I've made in my lifestyle and in business and work and in the new year here is taking weekends off. I hadn't done that in the past, but I am now. As we simplify this profession here, the way it should be. We're going to talk about the realities of intraday trading, and we're going to talk about some truths and misconceptions and so on. But first, let's have a look at a couple of markets. Crude oil, which had been and may still to a tiny degree be popular with retail traders. Once upon a time, this was the most active, dynamic, liquid, volatile market to trade. Those days are over with. But I still get communications from traders who will say, well, what can you tell me about crude oil and this, that, and the other thing? And I can tell you this much. It isn't what it used to be. It's still fine to trade around 3, 4 a.m. Eastern time, as I've said, numerous times here lately. And by the way, this is the last time I'm going to profile crude oil at all. So this is what I have to say. And I'm not hating on it. It's a sad thing, really. I wish it was the awesome trading instrument that it used to be. But when they closed the pits to open outcry at NYMEX and they eliminated that, they also changed this contract forever. And I don't see where it'll ever go back to behaving the way it once did. I just don't. With computers running the entire show, what you see now is probably what you're going to see. Anyway, whatever day this was, Thursday, I think, there was, congestion inside of the open of Asia and Europe, and then it made this surge move. Then they have flat coil. Then they rolled over about 7 a.m. or so on. And then this is into the pit session, just whip bars. They just whip all over the place. You can't find the right side of direction because there is none. It's all just spike and surge and chop. And then again, here on March 3rd in the pre-market, this was Friday, pre-market is all just chop and bang and surge and whatever. And then as the traditional pit session here opens, you can, they go up and they back chop and they go up and they back chop and they go up and they back chop. And it's this back chop that kills you, because unless you get absolutely perfect precision, correct entries by random chance, quite frankly, you get back chopped out of your position. And there's no way not to, because you never know when it's going to be a transversal move going the opposite way. So it still does what it always had, structurally. Here's the open range. Here's the coil market's roadmap. Hits the 90 plus percent probable mark. It hits the 62% probable mark. It hits the 50% probable mark. All on Friday. It does what it has always done. But the manner in which it gets there is rendered untradeable. That's the problem. I wasted a lot of time spinning my wheels, barely making progress, making no progress whatsoever in crude oil, searching for solutions as the market got worse and worse and worse to this degree, until finally I said, you know what, I'm just going to take my marbles and play in another sandbox, to mix my metaphors. And I went over to the S&P, which is much more structured, and I got it dialed. I mean, straight up, got it dialed almost every day. Look, hitting the results that I'm looking for. It's automatic. It's not stressful. Sometimes it takes patience and so on, but I mean, it's there. And this is a hard concept for a lot of traders to believe. I'm going to talk about that in a minute. Let's switch looks here from crude to the S&P and say goodbye to crude, because I'm not going to profile it again. So here's the S&P, and this is Friday, and it's untradeable. And I didn't even try to trade it Friday, because I'd met and exceeded my goal expectations for the week prior. And a couple of things. Unless it's a non-farm payroll event Friday, Fridays are usually bad. For whatever reason, once the machines have taken over the markets, Fridays are just abysmal. You're better off with a 4-day work week accomplishing your goals. And what's wrong with that? Do you not want a 3-day weekend? Do you not want to play golf or enjoy time with your significant other, or whatever your hobbies and pursuits are on a Friday? Remember when you were trapped in a job or a career or profession that forced you to work 5 or 6 days a week and you wish you didn't have to? Now you don't have to. That's pretty amazing. All right. So Friday there was nothing, and there wasn't even a single trade signal generated in the manner that I'm working while I looked at the markets. Thursday, on the other hand, okay, it's just standard day of business now. If you keep in mind all of that brutal whip chop in the symbol we looked at before in crude oil, we've already covered this. Broke. First of all, let's get the 50% on here too. So 50% of the open range, I mean, it's just perfect structure. Open range, they held inside of the 50 percentile, closed down below, pulled back, prior support, now resistance, traded lower, channeled sideways, eventually traded down to the 233, eventually fulfilled the 90% probable. Remember when we, I think it was the most recent video profile here, showed the short sequence from here to here, or wherever it was that I covered, and I said I covered because this is 90% probable to be hit, but we don't know how the market's going to get there. It could back chop up several times first, and indeed it did. All right, and these are just the computers playing with everyone, trying to trip stops, running stops, and so they ran sell stops here, and then they ran buy stops here, and then they finally took the market down where they wanted to after tripping out stops from both ends, because the computers are written to know that traders are looking for breakouts to enter trades, and or they place their stops below prior swings. So anyone who's buying this market or trying to buy the market anywhere here, they're hiding their stops below the most recent low swings. And so what better way to stop out all of the longs and get them on the short side than to break down below here and then immediately fire it up? That is a design trap to destroy individual traders by tripping out by tripping sell stops, which kicks them out of the long positions to close, and it also opens new short positions, right? So you've got open interest going both ways. You've got sell stops to close a long, and then you've got sell stops to open a short, and then they immediately blow them out of the water. Look at that, smoked them out of the water. And then what do? For the people who were short, they took out their buy stops, and so now they're flat at a loss. And then they triggered buy to open stops. Now you got longs who are long the market, open, expecting it to go up, and they tip it over. So they blasted out both sides. Doesn't matter if you're a bull or bear, short or long, whatever you are, you're done. They killed you. That's what the machines do these days. You have to avoid that kind of stuff, and we have it dialed. I don't say that to brag. I don't say that to boast. I'm saying it because it's a fact. We have it dialed that if you want to trade a moving methodical market like the S&P and you want to pull a few points a day on average per contract, and then you can trade however many contracts your account will afford now or in the future, you can. And that's what I'm doing, and I'm happy to be doing that. And I'm happy to do that with whoever wants to do it with me. It's an unfortunate thing in this industry, and a lot of it's perpetuated by the blogs and the email offers and the forums and chat rooms and message boards and so on, where people advertise automated software and trade like a pro in 7 days, and this is so easy. It'd be like stealing from your grandmother, and so on and so forth. It is not. Trading is not easy. Trading cannot be automated with software that you can sell to the masses unlimited without saturating every single market with zero exception. None of that stuff is true. Unfortunately, it jades people who would like to trade, and they would like to trade successfully, but they're so bombarded with crap, quite frankly, that they just don't know when someone's crying wolf. And so, to mix my metaphors again. And finally, when reality comes along, and somebody says to them, hey, trading's not easy, it's hard, but I have it figured out. It can be simple. All right. The words simple and easy are not synonymous. Simple means plain, not a ton of moving parts, easy, simple to grasp, and doesn't take forever to, enjoy results, so on and so forth. Somebody comes along and has that, and they're just too jaded to listen. And I get that. I do understand. But I've done the best I can to show what it is that we have and how it works and explain every single aspect of it, and there isn't anything more I can do. So That's all I can say. I'm really happy with the progression of how my trading has gone for the past couple of years. Quite frankly, it's been a struggle with crude oil because I was in the wrong market. I simply was. It just got thinner and thinner and thinner and thinner until it's just flat out died. And that's unfortunate because I really loved trading it. I had a great time. It was, everything I was looking for, and then it all changed. I mean, what can you do? Fortunately, the stock markets have remained steady, such as they are, and I'm content to be a scalper to take several trades a day and pick off, anywhere from one to a few points per contract and be done. And the next transition I'm making is 4-day work weeks. I'm only going to work Monday through Thursday from 9:30 in the morning until noon, sometimes in the afternoons, with the monthly exception of the non-farm payroll. That I will work from 8:30 in the morning onwards until noon if that's what it takes, because once a month there's great opportunity there in the pre-markets on a Friday. And the other thing, this Friday, there was Janet Yellen speaking at 1 in the afternoon to somebody about something somewhere. And so anytime there's that Yellen is speaking ahead of time is worthless to trade. And then on a Friday afternoon, anything that might happen is just going to be whips and spikes. So why even bother doing that? And so I didn't. And that's all just part of the maturity of a trader. That's just part of accepting where the markets are, where I am in my career with the markets, and just being in harmony with everything. And it's an awesome thing to be in harmony and in peace and to really have things dialed in. So other than that, I don't really have a lot to say. Intraday trading doesn't require extensive research. You don't need to mark up your charts with a whole bunch of rubbish that happened in the past that doesn't matter today or anything like that. Intraday trading is very pure. Which way is price going now? Where are the next signals in harmony with that direction now? Where can I get filled? Where do I place my stop and where do I get out? It's that simple. It doesn't matter who said what yesterday or overnight or what IPO is going on or what this currency is doing or where these various levels of volume happenings occurred in the past. And none of that matters. It's all irrelevant. The only thing that matters is which way is price going from here? Where are the next signals in harmony with that direction? How do I defend that trade? How much profit do I accept? That's it. Once you get that dialed in, you have it dialed in. And you too can enjoy 4-day work weeks for the rest of your life. Hope this helps. Looking forward to working with you inside. And as always, best trading wishes.